points today, or the S&P rose 30 points. What the heck does that even mean? What is that about? Well, welcome to Investment Basics, mini class number 13. And if you've been following along and applying what you've learned, you've opened your investment account, you've bought your first stock, and you're buying more. You're learning about the market. You're learning and educating yourself. So, what about this point system? Let me tell you what it's not. It is not a price. It is not a number of shares. The S&P 500 index is also known as the S&P 500 value. It's a point system. Think of it like a scorecard or a leaderboard of the top 500 US companies. And these companies, if they don't perform well, they could drop off that top 500 and another company could slide into its spot. Now, this particular number was recently 6,330. What does that mean? How did they come up with that? Who's doing it? Well, basically, they take those top 500 companies, they assign a value to it. They look at its market capitalization, and they look at the number of outstanding shares, and all of these fancy things. Then they divide that by a certain number. It's not quite an average, but they come up with a number. And that is basically how investors gauge whether the stock market is going up or whether it's going down. They look at that S&P index. And as I said a couple days ago, it was 6,330. And I wanted to give you a tool to help you understand it and to help it be relatable to you. And the tool that I'm going to share is an ETF. It's an exchange traded fund that is commonly known as SPY, SPY. That's a ticker symbol. You can go and buy it. And when the S&P was trading at 6,330, SPY was trading at about 1/10 of that price, about $633. Now, it is not an exact price per index relationship. It's based loosely on that. So, tell you a little bit about the history. Way back in 1929, they had the S&P 90. There were only 90 top US companies, and they also assigned a value. Now it's grown to the S&P 500, so this has been in practice for nearly a century. The S&P, back in the housing crisis of 2008, dropped. It was about 750 points. 750, that wasn't too long ago. Today we're up over 6,000. And back at that time, during the 2008 housing crisis, SPY was able to be purchased at about $80, $83. So again, you have that relationship. Now again, the S&P has skyrocketed to over 6,000. So I want to let you know, if you are looking at the stock market now and think, oh my gosh, it had a big pullback, it's dropped, the value of my stocks are not what they're worth. Hey, don't worry, the stock market typically goes back up as it has historically. So what I want you to do is keep an eye on the S&P index. Keep an eye on that and learn how your stocks are doing. Don't fear the volatility. That's where you make money as things go up and down. And keep investing, keep learning, keep educating yourself, and I will see you on the next one. Thanks again. And if you have more questions about investing for beginners, feel free to type them in and I'll be happy to do a video on that as well. So again, stay well, keep investing, and I'll see you next time.